The S&P 500 continued to close with a new all-time high, even with the market-leading stock such as Apple and Amazon faltered after missing earning expectation. With the FOMC meeting coming up next week, and the expectation the Fed will announce the beginning of the tapering, you won't believe what the market is telling us what the S&P 500 is setting up to do. If you'd like to see what that is and what the market internals are telling us objectively, stay tuned. Welcome. Today is October 30th, 2021. In this video, we will review all the major market indexes and the market internals. Then we will look at the 10-year yield along with the US dollar, the crude oil, and the precious metal market. And near the end of this video, we'll take a look at Tesla and see how it is influencing the market. And finally, we'll assess the possibility on what the market is telling us, what is in store for the S&P 500. So let's get started. Friday was the last trading day of the month of October, so we will start with this monthly chart of the S&P 500. After a 5% pullback in September, October started with a continuation to the downside. Then it rebounded solidly and ended the month with a gain of almost 300 points. It gained 297.84 points or 6.91%. Also, it printed a bullish outside month candle with a range of 329.14 points and closed the month at a new all-time monthly closing high. Now, looking at the weekly chart of the S&P 500, we see 4 consecutive up weeks. And it is in a one-time framing up price pattern. Last week, it had a range of 70.72 points and ended the week with a gain of 1.33% or 60.48 points. The S&P 500 also closed with a new all-time weekly closing high, and it closed above the ascending 10 and 40-week moving average. And it is in the upper half of this weekly price channel. From the weekly price action, the weekly trend remained to be up. Now, before we take a more detailed look at the price action, let's go review the market internals and see what they did and what they are telling us about the state of the market. On this chart, we see the VIX was below the 20 level throughout the entire week, and it gave the market participant a scare on Wednesday when it dipped down after a new all-time high from Tuesday with a shooting star or a graveyard doji type of candle. And the put-call ratio stayed under 0.75 throughout the week as well. And these two market sentiment indicators are telling us the market participants are still risk on with little fear. Now, let me point out a couple of the observations that could help you identify the end of next pullback and the end of a near-term uptrend. You see the VIX was declining as the S&P 500 was also declining between the end of September and the beginning of October. And similarly, the put-call ratio also doing the same thing. And these two indicators usually move inverse to the direction of the S&P 500. When they are moving in the same direction as the S&P 500, then they are in a divergence. And also notice how the smart money quietly exit the position while the market participant are feeling complacent. Now just identify some of the area where you see the VIX is relatively low and there is a slight movement on the price range, and you can see the smart money is essentially quietly exit the position prior to a pullback. So the key takeaway here is to look for divergence from the VIX. After we have spiked, that will give you a clue that the end of the pullback is near, and start to monitor for a possible bounce from the S&P 500. Now let's look at the market internal, the pulse of the market. Starting with the up-down volume ratio, remember on my midweek video, I pointed out the down volume was more than the up volume on Tuesday when the S&P 500 made a new high and then followed by a bearish candle with increasing down volume. And that could possibly lead to more pullback. obviously the S&P 500 not only did not pull back, it put in new highs. But once again, on Friday, the up-down volume ratio was negative, more down volume than up volume. And the daily advanced decline also shows similar divergence. There were more declining issues on Tuesday and on Friday. So remember how the sentiment charts show how the smart money are sneaking out quietly. Well, these two internal are also telling us the smart money are quietly sneaking out again. Not much have changed on the new high, new low in the New York Stock Exchange. All we can say is it is not at a level that indicates a strong broad market advance to new high territory. And the NYSE cumulative advanced decline line continued to show negative divergence, and we will monitor it for resolution. For the NASDAQ market, the NASDAQ 100 was up 72.31 points or 0.48% on Friday, but with only 43 more advancing issue than declining issue. Although there were more up volume than down volume, the ratio was not high enough to support the price action. And the new high, new low is also not at the high level where it should be for the index to be in the all-time high territory. And the NASDAQ AD line keep warning us of this extended negative divergence. From the sentiment and the market internal, they are clearly telling us to be careful. The S&P 500 is moving up without broad market participation, and the market participants are feeling complacent and putting on risk while the smart money are quietly sneaking out. Now let's switch to the indexes and see what they have done and see what to expect for the coming week. On this daily chart of the S&P 500, we see it is trending inside of these two possible price channels. And if it follows the upward path toward the upper trend line here, then we probably be looking at the S&P to get near the 4,700 level. And if the S&P 500 decide to take a breather, then we should keep an eye on the high near this level here, the 4545.85, and these gaps down here at 4524 and 4496.41. and possibly down here at 4447.69. I know you won't believe this. I will tell you now, the S&P 500 could be destined to make another all-time high. If you'd like to see what gave us this clue, keep watching. Now let's take a look at the other indexes. On this daily chart of the NASDAQ 100, it is pushing toward this 200% extension from this Fibonacci swing here. And that level is 15,950.71. In addition, there could also be another Fibonacci retracement would pull back to this retracement zone here. I'm using this swing here, and as you can see, it pulled back close to 50% and then start bouncing back up. And now if it continue to move up and take out this trend line resistance, then the next level that we could be looking at is this 127 extension near 16,445. Now here on this trend line here for next week, if it come up to this trend line, then it would basically get up to near this 16,200 area. And for a pullback, we will watch this prior pivot high somewhere around 15,701.40. Then the zone near this 15,330 and close to this pivot high here. And for the Russell 2000, we're still watching to see if it can break out from this balance area and into this new, into the new high territory and get above this 2360.20. And if it does, then we will essentially targeting a 100% extension from this range to the 2498.30. But if we get rejected again at this upper boundary here on this balance area, then we expect it to come back down to test this 2195 and also the possibly the 2134 area. Last week, the Dow Jones Transportation got close to its all-time high near the 16,175.37. And right now, for next week, if it continues to move up, we'll be looking at this all-time high level. But if it decides to pull back, then we'll be looking at this 15,346.52 and also this gap here, near the 15,067.54. Finally, the Dow Jones Industrial closed with an unconfirmed Dow theory high. So unless the Dow Jones Transportation closed with a new high, look for the industrial to reverse. Here are the level to keep an eye on for the coming week. Upside 36,000, essentially coming up to this trend line here. And if it break that trend line, then we're essentially looking for this 100% extension up here at 36,438.84. If it pulls back, then we're essentially looking for this 35,150.37. And then this gap zone here near the 34,912.58. And that's the review of the indexes. So let's go and take a look at the 10-year yield and the other markets. On this 10-year yield chart, I am still watching the yield to come up to this 1.765 level. If it pulls back to this 1.45 level here, then the market does not believe the Fed will do tapering and raise rates soon. Or the market is projecting a weakening U.S. economy. So right now, the chart is showing the trend is up. So we'll see how it ends up after the FOMC meeting next week. And for the US dollar is trying to decide whether to go up to this 95.7 or retrace back down to this 92 area. So for the coming week, watch it break above this 94. If it break above this 94, then there could be a possibility of moving up to this 95.7. But it's get rejected and come down and break this trend line and look for this 92. And for the crude oil continue to march toward the 85 level. If it break above the 85, watch that $90 level. On a pullback, watch for this potential support near the 80. And if we break that 80, then we're essentially looking for crude oil to come back down toward the 77 level. Silver tried to break above this 25 level last week and failed. So watch for a pullback toward this 23 area and see could it find support here. But if it break above this 25, then look for a back test for a long swing up to possibly get up to this 29.50, because we're basically looking at this huge balance area here. Okay, but if get rejected and unable to get above the 25 level, then look for the possibility of come back below this 22.70 area and see would it get a swing long setup to play it back up to the 25 and ultimately break 25 again. We'd be looking at this 29.50. So there might be a long opportunity coming for the silver market. So be patient. And looking at gold, and you could see gold is basically testing this 18,404 level. So we're still looking at this possible inverted head and shoulder pattern here. So if we break this trend line, then we could see gold be moving up and essentially breaking out. And we could see gold come up to this high here eventually. So don't get FOMO if you miss this move. Because if it break out, there are a lot of upside potential to come for gold. But right now, we're still watching to see would it be able to break above this 1804 and come up and break this trend line. But if we reverse back, then we're still looking for the possibility of gold coming back down and retest these level down here. Now, before I show you the clue that is telling us the S&P 500 could be destined to make another new high, let's see how Tesla been moving the market lately and what to expect from Tesla next week. Ever since the Hertz purchase deal announcement, Tesla has been on a tear. But notice how it was trapped underneath this $1,100 level. And I have a FIP extension, 127 extension at 1126.24. So that will be my upside resistance level to watch for the coming week. And I will revise that level on my Twitter stream if it break above this level. So be sure to follow me on Twitter. Now for the downside, I'm looking at a retest of the level near this 1,000, 1,001 area. Then the gap fill between $944 and $910. From this 5-minute chart, you can see Tesla was hovering around this $1,100 level 15 minutes before the closing bell. Then it surged more than 10 points in the last 15 minutes of trading into a weekly option expiration. with a kilogram of screen. So with these options out of the way, will there be more juice left to lift Tesla higher next week? One never knows what the market will use Tesla and other FANG stock to achieve. We saw on Friday, Apple and Amazon were down due to the disappointed earnings report, but the market used Tesla, Google, and Netflix to push the S&P 500 into new high. And it could continue to push Tesla around to move the S&P 500 to give the perception that the market is in a good place. Now let's go see the clue that is telling us the potential for another new high for the S&P 500. Here's the market profile chart for the ES, the E-mini S&P 500. If you notice on Friday, it put in a poor high as it made a new all-time high. This poor high will likely get resolved in the near future. When it does, the S&P 500 will likely move to a new high. And if you are new to this market profile stuff, I have a short video that explains how I use it and what all these poor high single print stuff all mean. I will put a link for this video in the description below. So let's recap a bit on what the market is telling us. The market participants are feeling complacent and are comfortable with putting on risk. But the market internals are telling us the recent upward move lacks broad market participation. And we saw some of that manipulation by the big players using Tesla and a few FANG stock to move the market on Friday, while there wasn't a huge margin between the number of stock advancing in price and the number of stock declining in price. So as the smart money is sneaking out quietly, the E-mini S&P 500 future is also telling us there could be a higher high to come. So is this a mixed message from the market? Not at all. What the market is telling us is to be prepared for a near-term pullback, although we could see a higher high before the next pullback or a new high after a pullback. So the prudent things to do is to limit your risk and tighten your stop if you are trading. With a shift from the Fed on the interest rate policy, there will be a period of repricing from the market. And during that period, we could reposition a trade to take advantage of the opportunity from the shift. It could be up or it could be down. There are instruments for us to play the downside by going long on the inverse ETF or stock that will benefit from the shift. Until then, be careful. And be sure to smash that thumbs up to help me promote and share this video. And subscribe if you have not subscribed to this channel. And follow me on Twitter if you'd like to get updates on my thoughts throughout the week. Thank you for watching and stay safe.